All right, so today we tested the danger zone, which is this previous low back here on March 13th. And I want to clear something up because I talked about below that level, the possibility of a bear market. However, there is no guarantee we need to go in a bear market. This is still stock market correction territory. And with the intraday low, we almost hit an 11% correction. Now, what I want to clear up is below the danger zone, we are at increased probabilities for a bear market. And all I want you to understand about that is that during a bear market, there is no guarantee how far we are going to drop. And it's a lot easier to be extremely cautious below the danger zone. For example, below the danger zone, we can drop an additional 1 or 2% or an additional 10 or 20%. That is a huge difference between a little bit more in a correction and a full-blown bear market. So it does not guarantee we have to go into a bear market, but you should be prepared for the worst if we do indeed see price breaking down below the danger zone. So that danger zone is 551 on SPY. You can see today we tested it, and this is a bullish indication that the buyers showed up yet again on extremely high volume, because that tells us where we found buyers last time, we still have people interested in buying at that level. And they're not just little fish, they are big volume fish that are pushing price higher. And this could turn into a double bottom breakout, which puts in the bottom, which means the end of the correction is here and we're getting ready to go higher again. Keep in mind, we are below the 200 daily moving average, very close to the danger zone. So anything is possible here. We could rally out of this hole, get back above the 200 daily moving average and resume the bull trend, or we could stay below the 200 daily moving average and break down and get down below the danger zone and start a deeper correction or a bear market. For that reason, as I always tell you, you should be prepared for any of these scenarios and then simply let the price action do all the talking around these critical levels. And that's why I tell you to move like water, because you don't need to care if we go higher or lower from here. If you know the critical levels and what to watch from price and you move like water, you're going to do well whether we go higher or lower. And that is all you need to focus on, and don't let it become an emotional roller coaster. If we go lower, then we're going to likely go lower, and you can plan for that. And if we hold this support and get the double bottom breakout, we are likely going higher, and you can easily prepare for that. So all you really need to understand is how critical this level at the danger zone is at 551. While we are above it, we could be going higher, and while we are below it, we are likely going lower. So it's going to be very clear above or below this line in the sand that I'm calling the danger zone on if you should be looking for longs or shorts, or just staying risk off or risk on. Everybody is going to trade slightly different ways. There's no reason to get into the details of exactly what you should be trading. It is more important that you have a trade plan that you are comfortable with, and more importantly that it revolves around following price. That way you are prepared if we are above or below this danger zone. So I hope that clears it up. Everything is going to depend on 551. While we are above it, as you can see, we are testing that resistance at 559, and if we continue higher, we have 564 and then 573. So just take it level by level and day by day. If we come back down and reject from a lower high and break down below 551, then we are going to start looking like we're in a bear trend going lower. And in that case, we'll be looking for at least 535. So it should be a very clear drop down below that support if the buyers disappear from the danger zone, which, as you can tell today, the buyers did not disappear. In fact, they showed up in a big way. So 551 looks like a support. You can continue to stay bullish above and then just have a plan if we break down below it. On the NASDAQ 100 triple Qs, we were flat on the day, basically went absolutely nowhere by the close, but as of the open, we did open down below the danger zone, which was that support at 462, and the break of the danger zone was the breakdown below 468. Below 468, again, that is increasing the probabilities that this is a lower high and we're going into a deeper bear market correction, which again is very hard to predict how low that's going to go, so you should be managing risk very well if price starts to close down below 468. Above 468, we can still push higher towards 474 and then 483. And then above that, the very critical 200 daily moving average and previous high right around 494. So take it day by day, level by level. You know the danger zone, which is the critical risk zone. Above or below that is going to tell us everything we need to know. And then just be prepared for both of those scenarios and continue to move like water. If you do everything that I'm talking about and you have a plan and you simply react to that plan based on price action, you should remove a lot of the emotions that come from trading and always make sure your plan has solid risk management. If you're going long, long or short does not matter. It just needs to be in your plan on how you are going to trade it and where your risk and your reward are. And as long as you have favorable risk reward ratios and you believe you are putting yourself in the correct trade setups, all you really need to do is sit back and let time pass and continue to trade after trade after trade, continuing to do the same exact practice over and over and over again. And that is how you become a disciplined and profitable trader. If you want to come trade with me, the best way to do that is TSC Trade Alerts, where you get the exact buy and sell alerts for the percent allocations that I am trading for the TQQQ and the SQQQ. You can find out how to join by clicking on the link in the description of this video. So thank you for watching, everybody. Now go crush this market.